Happy Friday out there, folks. It's Darius Dale to present our macro minute for Friday, December 10th, 2021. Starting with markets here, we got stocks mixed, commodities up, crypto up, dollar up, global bond yields up this morning. Big movers, you have Japan's Nikkei 225 down 1%, WTI, Nat Gas up 1% each, and Bitcoin up 2%. On the economic front, it's all eyes on the November CPI release of the US economy today at 8:30 Eastern. Consensus is expecting a 60 basis point acceleration in the headline to 6.8% year over year, with the high forecast at 7.1%. We went back and looked at each of the four times CPI surprised economist consensus expectations to the upside by at least 30 basis points in 2021. So that came in April, the April CPI print, which was obviously reported in early May, the May CPI print, the June CPI print, and then lastly the October CPI print, which came in on November 10th. And the results of the back tests are interesting to say the least. So in April, just to reiterate, April CPI that came out on May 12th, the consensus was expecting 3.6%, came in at 4.2%. The May CPI print came in on June 10th. Consensus was expecting 4.7%, came in at 5%. June CPI print came out on July 13th. Consensus was expecting 4.9%, came in at 5.4%. And then lastly, in October, the October CPI print came out on November 10th. Consensus was expecting 5.9%. It came in at 6.2%. Taking it to the chart here, the back test results are interesting to say the least. So we have insides of four, obviously here. The median total return for stocks, both the U.S. equities, global equities, emerging market equities are down with low percent positive ratios. You got a flattish median total return for commodities on the day of the print. Bitcoin down 1% on a median basis, with obviously a low percent positive ratio. The best assets when the CPI surprised to the upside, at least this year, have been gold and the dollar. But taking it a step forward, it's not just obviously risk management just doesn't live with today. It's not going to end today. Looking at it on a 1 week forward basis, you look at the percent positive ratios, and the first thing I notice is, hey, look, the things you would expect consensus, the narrative driven crowd, to go chase on the day CPI surprises to the upside, typically has a very poor median 1 week forward performance. So commodities, looking at the DBC ETF, down almost 4%, Bitcoin down 9% on a median 1 week forward basis. And obviously those percent positive ratios are pretty gnarly to the downside. So be aware of that. Certainly we want you guys to be 42 macro aware of these dynamics. As I said, maybe 6 weeks ago at this point, inflation is sowing the seeds of its own destruction. And this is exactly what I mean by that. Investors could sort of get caught wrong-footed chasing some of these inflation exposures because the market is pricing out the inflation as a function of what the Fed's got to do on the back end of it all. So getting back to the meat of it all, the today's probable range setups: overbought signal in the Shanghai Composite, oversold signal in the U.S. dollar versus the Mexican peso. S&P 500's bullish VAMs with 2.8% downside versus 3.7% upside. WTI minus 16% downside versus 4% upside, still bearish VAMs there. Bloomberg Dollar Index, that's bullish VAMs with 0.3% downside versus 1.3% upside. 10-year Treasury yield, still bullish VAMs with 9 basis points of downside versus 24 basis points of upside. Bitcoin is neutral, minus 6% downside versus 23% of upside. Ethereum's neutral, minus 13% of downside versus 20% of upside. And then lastly, gold, minus neutral as well, minus 1.8% downside versus 3.1% upside. So everyone out there, have a wonderful weekend. Best of luck out there today. Best of luck out there next week. And obviously best of luck out there in 2022. Cheers.